Welcome back, members. Now we have the fourth session for the day and last session for the 2 days conference. A session on CARO by CA Srihari R. Can I request CA Venkat sir to escort speaker CA Srihari R onto dais and then welcome him with floral bouquet. Thank you. Thank you, sir. CA Srihari R is a fellow member of Chartered Accountancy and a graduate in commerce. He has handled statutory audits, internal audits, has outsourced CFO services, including many startups in India and USA. He has over 10 years of experience in handling process audit, preparation of standard operating procedures, special audits, investigation audits, etc. He is also into direct and indirect tax consulting and advisory services for various organizations. With this brief introduction, I present before you CA Srihari R. Over.
Thank you, sir. So, I would be taking. I'm audible. Yeah. Thank you. Before I start with explaining what is CARO or what are the different paras on CARO, just a simple question on this. Those who are into practice or whatever it is, just a simple question on this. How many of you qualify your clients' audit reports? I mean, honestly. How many of us honestly qualify our audit reports? Good. I mean, a few, right? Majority of the times we qualify government audits, or if at all we get PSUs and all, we'll be very brave to qualify or whatever it is. But generally from my experience or whatever I've seen, private companies or direct private company clients, whoever we have, generally we don't qualify. Sir, fees ಕೊಡ್ತಾರೆ sir, ಅವರದೆಲ್ಲ ಹಿಂಗೆ qualify ಮಾಡೋದು. ಅಥವಾ client ಹೋಗ್ಬಿಡುತ್ತೆ sir. Client qualify ಎಲ್ಲ ಮಾಡಿದ್ರೆ ಉಳಿಯಲ್ಲ sir. Correct. This is the general tendency what we have. We'll not have that braveness to go ahead and qualify. If at all it is wrong, we don't bravely tell, yeah, this is wrong, I'm qualified. I mean, my professional ethics is important. Correct. So, why am I asking you on qualification of audit report is, from my experience, wherever I've seen, when it comes to audit report, I mean, you would have seen audit report. To an audit report, you'll have two annexures. One annexure we give it on IFC, and one more internal financial control or financial reporting. And one more annexure we give it on CARO, correct? Many companies where I've seen, auditor would have given an audit report, correct? Which contains audit report and those two annexures, but IFC or CARO would not be applicable to that companies. I mean, rather than companies for which CARO is applicable and they would not have given a CARO report, those are very less cases. But the cases where I've seen, a common mistake where I'm seeing this, they would have issued an audit report which contains IFC, comment on IFC, a report on IFC and a report on CARO. But to that company, IFC or CARO would not be applicable. So that is a common mistake what we are coming across. I mean, rather than CARO, this mistake we are seeing when it comes to IFC. I mean, we would have reported telling that, yeah, IFC is in place, internal financial control, management is responsible, they have an internal financial control in place, it is operating fantastic, it is effective. I mean, everything we write, we sign and we would have given where IFC is not even applicable to that entity or to that company. So, generally in audit reports, in many of the firms, I mean, we would be maintaining professional ethics. I mean, I qualify, I'm brave to qualify things, I read the audit report, we are there. But I'm taking in general, majority of the cases when it comes to audit report, the common mistake what we are doing is copy-paste, correct? We have audit report format. So, we take a audit report format of the previous year, sir, we copy, we paste, sir. Correct, sir? And when we were doing our articleship, we remember our bosses telling this dialogue. When we take an audit report, they used to tell us, at least have a courtesy to change the year. I mean, we would have taken last year's with the same copy paste, we would have taken a printout and gone, and they would be like, at least change the year and bring it to us. We know you have copy pasted, both of us mutually know that we have copy pasted, but at least change the year and bring it to us, correct? So this is the level of importance what we are giving it to audit reports, correct? We don't have the detailed reading of the audit report or applicability of the audit report. Now, why am I telling you all these things is, before I start with CARO, we are well versed with the paras of Caro. I mean, the 20 clauses or 20 paras, whatever are there in Caro. We know what does that tell, how do we deal with it. So we would be familiar with that. But before going into those clauses, we are not very clear on whether Caro is applicable to this entity or not applicable to this entity. I mean, we don't give that audit, along with that audit report, we don't give a Caro report to all the entities, correct? We give Caro report only to those entities for which Caro is applicable, correct? So, it is crucial for us to understand to which of the entities Caro is applicable first. We might feel it very simple. I mean, sir, there is a list given, sir, to this it is applicable, to this it is not applicable. So, we'll go as per that list. But detailing when you go to that list, there are many confusions before we decide whether Caro is applicable to a company or Caro is not applicable to a company. Correct? So first I would like to take you through that applicability of Caro. I mean, first of all, let us understand whether Caro, to which of the companies Caro is applicable and which of the companies Caro is not applicable. Then we'll go into each and every detailing of each and every paras of Caro. Correct? Okay. Now, one second. So, when it comes to applicability of Caro, they tell company audit report audit 2020. Yeah, before I go to applicability, we might all be knowing that this was a new Caro report, what we are giving it now, from 2020. I mean, before that, we had an old Caro report which we used to issue, correct? Now that we are issuing Caro report 2020, and we might be a little familiar because it's already been more than like, this is the third year which we are issuing this new report, correct? So, when it comes to applicability, they tell Caro shall apply to every company, including a foreign company as defined under 2 subsection 42. I mean, what is a foreign company? We all know. A company incorporated outside India, but they're doing a business in India. I mean, they have a place of establishment or they're doing a business in India. So to them, Caro is applicable. Yes, sir. If at all it comes in this criteria, Caro is equally applicable to a foreign company. This is the first clarification what they're giving. Second thing they're telling, except, I mean, Caro is not applicable. To which of the entities Caro is not applicable? They tell to a banking company. Fair enough, sir. If at all it's a banking company, we just give an audit report in case it's a company, but we don't give a Caro report because they specifically mention Caro is not applicable to a banking company. Second thing they tell, an insurance company. So they specifically mention to insurance companies, Caro not applicable, correct? Third thing they tell, Section 8 companies. Section 8 companies are companies operating for not for profit. I mean, with not an objective of profit. If at all they are operating, we call that as a Section 8 company. So to Section 8 companies, Caro is not applicable, or as an auditor we don't comment upon Caro, correct? Fourth thing is 1% company. They tell 1% company, Caro is not applicable. And continuing with that, they tell a small company. To a small company, Caro is not applicable. Now we have to be careful about the definition of a small company. I mean, it is undergoing many changes. What is a small company? That definition is undergoing changes now. So to a small company, Caro is not applicable. Till here it might look a little easy. Fair enough, sir. Banking company, insurance company. So the 1% company, Section 8 company, small company, Caro is not applicable. Till here it looks simple. Now comes the real crux where actually we are going wrong or where it needs a detailed detailing, correct? So next I tell, a private company not being a subsidiary of a public company. I mean, if at all there is your holding company is a public company, subsidiary company is a private company, don't even check this list, Caro is applicable. Caro is applicable, correct? Because they specifically tell this exemption what they are giving, it is to a private company. That private company is not a subsidiary company of a public company. If at all it's a public company, a subsidiary company, then don't even check this list. Directly go ahead, Caro is applicable because your holding company is a public company, correct? So apart from those companies, a private company, they give you 3 criteria. First criteria, they tell, having a paid up share capital and reserves not more than 1 crore as on the balance sheet date. So as on the balance sheet date, if my paid up share capital and reserves, if I total those 2 things, if it is not more than 1 crore, Caro is not applicable. Now, looks very simple. One major thing is, we'll have that in our mind as, yes, paid up share capital, reserve. Looks simple. The question what I just want to ask you people is, what is this paid up share capital? Question number 1. Is equity share capital included? In paid up share capital definition, is equity share capital included?
Yeah.
Yes, it is included. Preference share capital included?
Yes.
Yes, it is included. Preference share capital in total. Now comes the crucial point. Suppose I would have received as a paid up share, I'll issue a partly paid up share. I'll issue a partly paid up share. I would have received part of the money from the partly paid up share. Now I'll call for the remaining amount. I'll make a call. Now he will not pay the amount. What will I do? I'll send notice. After that, in spite of that, if at all I'm not getting my call money, I'll forfeit his share. Correct? Suppose in my company there is a forfeiture of share. Is this forfeited amount will become part of the paid up share capital for the purpose of calculating this 1 crore limit, or should we exclude that? We are of the assumption that we have to exclude that, but there has been a clarity given. If at all, out of 10 rupees share, if at all I have received 6 rupees, partly paid up share, correct? He will not pay that 4 rupees. I will forfeit this 6 rupees. This should form part of your paid up share capital for calculation of this 1 crore. So,
Is it not a reserve?
I'm sorry, sir?
Is it not a reserve?
Sir, we'll transfer it to reserve, correct? But initially it's a partly paid share.
But what I mean is that a forfeited amount, even if it is reserve also, it's counting for one.
Correct. Either by this thing, even though if we transfer it to reserve, under reserves we again calculate it. I mean, as a whole, that should form part of your calculation for that 1 crore rupees amount. So this is one clarity. I mean, what am I trying to tell is, sir, that should not be excluded, because of the notion what we have is that forfeited amount will not form part of my calculation for this. So that should not be excluded. I mean, we include that. Having said this, in relation to this, we get one more doubt. Sir, suppose I would have received a share application money. I mean, it's not a partly paid up share, sir. Just that application money is what he has given it to me. Should that application money be a part of this paid up share capital? No. Going by the disclosure also, we give that a separate disclosure. Share application money pending allotment, we give that a separate disclosure. So that we are very clear, that should not be included as a part of this 1 crore rupees. So this is what constitutes a paid up share capital. Correct? Next, paid up share capital plus they tell reserves. Now reserves is a huge definition. I mean, we can have any kind of reserve. May that be a capital reserve, that can be a revenue reserve. Correct? Now the question is, reserve as in we know that, sir, I earned profit this many years, sir. All that profits I categorize that as a reserves and surplus. That shall be added for calculating this 1 crore rupees. Now the question is, this is called as a revenue reserve. What we are adding is a revenue reserve. Now the question here is, do we add capital reserve to this? For the purpose of calculating 1 crore rupees limit, do we add capital reserve? I have created a capital reserve. Should I add that also, or should I exclude that? They tell no exclusion, capital reserve also has to be added. Forget capital reserve. They further go ahead and say, if at all you have a revaluation reserve, I would have revalued my assets and there would be a revaluation of reserve created. That revaluation of reserve also has to be added for the reserves and surplus calculation, and then this 1 crore rupees calculation has to be added. And it goes without saying, we have to add P&L credit balance, whatever profit I have, that also gets added. No sir, I don't have a profit, sir, I am into losses. I have a debit balance of P&L account. Should I ignore that, or should I net it off with that and then reduce from this amount? Net off. They very clearly tell, don't ignore your debit balance of P&L account. Suppose you have a paid up share capital, other reserves, suppose there is a loss, you subtract that, whatever the net figure come after netting off, so that is your paid up share capital plus reserve. So with this definition, if at all that exceeds 1 crore rupees, yes, I have to give a Caro report, yes, I will not give it. I mean, this is one of the criteria. We will go to the second and the third point. Coming to the first point, this is the clarification given. So with this formula, we have to calculate whether my paid up share capital plus reserves is exceeding 1 crore or it is not exceeding 1 crore. Hope I am clear, right? Yes sir, Caro explanation itself they are giving all these things. I mean, whenever they give you Caro detailed guidance note they are giving, even institute whatever they are giving, in that these detailing it is being given. Right sir? So the first criteria is I will check my paid up share capital plus reserve. This is the first criteria to check if Caro is applicable or not applicable. The second criteria what I check is they tell which do not have the total borrowings.
The first point only, paid up capital. Now if I am following Ind AS and the preference shares I have included under financial liability, do you still take preference shares here or do you exclude it?
We add sir. We add.
You still have
preference capital, whatever. Preference capital, whatever is there, that forms part of your paid up share capital.
So basically, paid up capital as per the MCA.
Okay, I mean,
Whether or not I am showing it under.
but the nature of it is remaining
Preference
unknown.
share.
That's a preference share capital. That's a capital repaid as a preference.
Oh.
So this is the first one. The second criteria what they tell is which do not have a total borrowing exceeding 1 crore rupees from any bank or financial institution at any point of time during the financial year. One clarity what I like to give here is, see, paid up share capital and reserve we look as on the date of balance sheet. I mean, as on 31st March, we look whether it is exceeding 1 crore rupees or not. But when it comes to borrowing, they tell at any day during the year. I mean, sir, as on the balance sheet date, my debt is only 10 lakhs. At any point of time, I would have borrowed 1 crore 10 lakhs. I have repaid 1 crore. Now still Karo will be applicable because they tell on any day during that financial year, if your borrowings exceed 1 crore rupees, then your Karo will be applicable. Now here comes a little detail. This is a very important point where we are all missing out. One point is, as I told you, we don't check throughout the year. We just check as on the balance sheet date. Throughout the year, if at all it is exceeding, that needs to be checked. That is point number 1. Second point is, borrowings from bank and they tell financial institution. Now, I borrow money from, let us assume, Bajaj Finance, which is a NBFC, non-banking financial company, okay? Or I borrow money from Tata Capital, which is also a non-banking financial company. Will I add this borrowings for the purpose of calculation of this 1 crore, or I do not add?
Yes, you could. You could.
They tell you have to add. They mean by banks and financial institutions include non-banking financial institutions. I mean NBFCs, whatever I told you, your Tata Capital or Bajaj Finance, whatever it is, or DHL, DHFL, whatever it is. These categories also have to be added in order to check your borrowings for that limit of 1 crore. This is one thing. Second question, what is generally coming up here is, sir, loan we will add, sir. Fair enough. Do I add OD also to this? They tell yes, because generally there will be a notion, loan sir, I have taken a term loan sir. This is OD sir. This is like a bank for me. This is OD. No sir, it is a borrowing done from a bank. At the end of the day, OD is nothing but a borrowing done from the bank. That also has to be added. Sir, irrespective of whether it is short term, long term, I'll go ahead and tell sir, if at all you have bills discounted, bills purchased or discounted, that also forms part of your borrowings. Correct? The next thing what they tell is, suppose, next question, I mean, just to give you a little clarity.
Now, what are financial institutions? Now, there is no IDBI.
Sorry sir?
Financial institutions. Which are the financial institutions?
Sir, first thing is banks,
Banks.
SBI, ICICI,
All banks.
all banks. For example, sir, I took an example of your Tata Capital.
No, that is NBFC.
That is also included.
No, we are ICICI, IDBI, IFC were there.
Hmm.
They were called financial institutions.
Correct.
Now they are not there.
Correct.
Why still they are mentioning financial institutions? They can add one side.
NBFCs. Yeah, they can tell. They can tell.
No.
But
KSF said on
there
that.
are more financial institutions. IFC is still there.
It's not lending.
Lending, but IFC is still there.
They stopped lending. ICICI is not there.
Old
IFC
loans
is
are
not
there.
there. IDBI is not there. All
Similarly,
are
infrastructure development corporation, those kind of things are still there. Some IFC institutions are still there.
All are provided to banks.
I mean, that's what sir. Non-banking financial institutions, whatever example we took. So basically they're trying to tell all banks plus these kind of everything you have to add.
No, the spirit of this one is
Borrowings.
borrowings where public money is involved.
Correct.
That should be the spirit
No.
of understanding.
Probably not. Why I tell you sir? Suppose I give a loan to one company. In my individual capacity, I give a loan. Correct? So that is not included.
Corporate borrowings, those are.
Because they specifically go ahead and tell, I'll come to different clauses where they tell any borrowings you comment. But here they specifically tell borrowings from bank or financial institution. There a little level of clarity they gave telling that include NBFC, non-banking financial
No,
institution.
you should be an NBFC.
If at all I am an NBFC,
Any lending without the license of RBI.
Correct, correct.
So by that virtue, what sir asked a question, the spirit of the inclusion is why that is closed, why they have included, that is not
okay. Let me ask you
money
one.
involved, is closed. That is the spirit should be understood.
That is the spirit, but with some exclusions, sir. Example, I'll tell you. There is a private company. It doesn't have money to run. Director infuses some money by way of a loan. Correct? Now this is not included here. Even though that will be categorized as a borrowing. Company is a separate legal entity and it is borrowing. But that is not included here.
No, but public money is not involved in that.
You mean unrelated people money?
It's a private money.
Yeah, but that's what, maybe public money, whatever it is involved. But not, as I told you, not exactly we cannot tell that because there are certain exceptions as I tell you. So this is one thing. Third thing is, I was just asking you, sir, I have a bank guarantee. Correct? I'm a company. I'm dealing with one more company. He wants a bank guarantee. I'm dealing with some transaction there and he wants a bank guarantee. I'll ask the bank by which we give them a bank guarantee. Now the question here is, do I include bank guarantees in this borrowings? Do I include bank guarantees or I don't include? Sir, but what generally happens is, just because I'm given a guarantee, that is not a borrowing, correct? Unless and until I default. If I default, bank will pay. Unless and until I default, that's not my liability. I've just given bank is charging me something and it is giving a guarantee on my behalf, correct? What they tell is, this is what we call it as non-fund based. Bank guarantee, the word what they use is non-fund based. If at all non-fund based devolves into fund based, that means what, sir? Suppose I don't pay a bank guarantee, I violate the terms of that contract with that company for which I've given a bank guarantee. Now bank has to go give them the money, which that becomes a liability to me. This is called as non-fund based, devolving into a fund based liability. If this has happened, yes, you have to add it as a borrowing. Correct? So lastly, last 2 points under borrowings is one thing where majorly miss out is credit cards. Suppose company has a credit card in which we would have had a payable as on 31st March or whatever it is. During the year we'll have a payable. That credit card, whatever is there, that's again borrowing. That has to be added while calculating this 1 crore. Lastly, I'll come to interest. Sir, I'll have a borrowing of 1 crore rupees. On that there is an interest accumulation. Now, should this interest also form part of this 1 crore rupees? They tell yes, but again they go ahead and give a further clarity on this, which they tell, if at all interest is accrued but not due. Sir, how can that happen, sir? What do you mean by accrued but not due? Suppose my installment every month is 10th. I paid my installment on March 10th. Next installment is on April 10th. As on 31st March, I'll accrue. That 20 days interest I'll accrue in my books, but that is not due. That becomes due only on April 10th, correct? Then I don't add it here. But if at all it is due, I had to pay but I have not paid. Interest is accrued and due, correct? That has to be added for the purpose of calculating this 1 crore rupee. Right? So, if at all we keep talking about applicability, that's a huge thing. Whether to decide Karo is applicable or not applicable itself, we have to spend a day on discussion of this. So let me just move on the further point. So this covers our second criteria to check relating to borrowings. Correct? The third criteria they tell us, which does not have a total revenue as disclosed in Schedule 3 of the Companies Act, including revenue from discontinued operations exceeding 10 crore rupees during the financial year as per the financial statement. Now they talk about revenue. If your revenue is less than 10 crore rupees, no need to give a Karo report. If your revenue is more than 10 crore rupees, company's revenue is more than 10 crore rupees, yes, we have to go ahead and give a Karo report. Now, again comes the detailing, what is revenue? Sir, very obviously we know sales. Company would have done some sales, sir. That is my revenue. The question what comes to our mind is, sir, along with sales, they would have collected some freight. Sir, in my sales invoice, I'm having my sale money and I'm adding freight to that. I'm collecting freight charges also in that, which I show it as other operating income in my financial statement. Is that to be included? Sir, I collect something known as packing and forwarding charges. Should that be included? Sir, I have some scrap. I sell that scrap, sir, for some money, for 2 lakh rupees I sell off scrap. Is that included? They tell yes, all included, including they tell income from discontinued operations. I have a vertical of business which I've discontinued that. I did it for like 3 months or so and I discontinued it. Even that has to be added if you total up everything. Okay, if that total revenue is exceeding 10 crore rupees, then Karo will be. Hope I'm clear with the applicability, right? So, before we decide whether Karo is applicable or not, first exclude these companies, insurance, banking, 1% company, small company, Section 8 companies, you just exclude all these things. Once we come to public companies, always Karo, sir. If at all a private company is a subsidiary of a public company, also Karo. But when we go to a private company, check 3 criteria: paid up share capital plus reserves exceeding 1 crore, your borrowings exceeding 1 crore, and your revenue exceeding 10 crores. If all the three are exceeding, then CARO is applicable, else it will not be applicable. Hope I'm clear with it, right?
What will be the difference when it comes to a small company and a private company having a turnover of 10 crores, whereas in a small company criteria, turnover has been amended up to 40 crores. What will be the difference in these two scenarios?
Correct. Now here we are not only looking at the turnover criteria. We are not just looking at the turnover criteria. Here what they tell us, they give you three conditions. Correct? If all the three conditions are exceeding for a private company, yes, CARO will be applicable. Maybe. As you told, small company, their turnover is suppose 30 crores or something. Maybe their paid up share capital is just 10 crores, 10 lakhs. Correct? Once they have a paid up share capital of only 20 lakhs and they're doing their business, but the turnover is, they're doing it good. Now it is not applicable, but because that's again all the three criteria are not fulfilling here. So once we consolidated look, all the three are fulfilling, now CARO becomes applicable. Right now? So this is your concept on applicability of CARO, to decide whether CARO is applicable to a company or not applicable to a company, right? So next agenda is, I'll just take you through the different, there are totally 20 paras under which we comment upon CARO, correct? There are 20 points on which the auditor is expected to comment upon CARO, 20 plus 1. That plus 1 I'll come to it later, what it is. So generally we'll comment upon 20 points, correct? So each and every point we'll just go through. Let me just try sharing any practical difficulties what we have come across or with our clients, whatever difficulties or practical aspects, whatever we have come, let me try to discuss that. So we'll just go through each and every point of that CARO. Okay. The first point on which we comment upon CARO is your property, plant and equipment. Under property, plant and equipment, your CARO reports ask the auditor to comment upon 5 aspects. Correct? The first aspect they'll ask us to comment upon adequacy of the records maintained. With respect to property, plant and equipment, whether adequate records are maintained or not. That is the first aspect what they're asking us to comment upon. Second aspect is whether there has been a physical verification done of the fixed assets by the company. The third aspect what they're asking us to cover is title deeds. Whether the assets of the company are in the name of the company or not. The fourth aspect they're asking us to cover is on revaluation of property, plant and equipment. Is there any upward or downward revaluation of property, plant and equipment? And the last point what we cover is if at all there is any proceedings held on the company with respect to Benami property, Benami transactions. Right? I'll come to it on each and everything. So basically on property, plant and equipment, auditor will be commenting upon these 5 points. Okay? The first point what we comment upon is whether proper records, adequate records with respect to property, plant and equipment have been maintained by the company. Now, if you look at the CARO reporting, they tell whether company is maintaining proper record showing full particulars, including quantitative details and situation of the property, plant and equipment. Let me stop here. They are asking auditor to comment whether the records maintained by the company with respect to property, plant and equipment is adequate, including quantity and location. Sir, we understand quantity and location. How many chairs are here? Quantity has to be mentioned. And location. Sir, it is located in this building or it is located at some other building. That location has to be maintained. These two aspects were very clear. But what is confusing here is they tell adequate records. Now, as an auditor, how will I know what records maintained is adequate, not adequate? Practically what happens, we go ask for a fixed asset register, correct sir? If at all I have to check records on fixed assets, property, plant and equipment, I'll ask for a fixed asset register. Fixed asset register, there will be name, quantity, location. Sufficient, not sufficient? Not sufficient. But here they mention, specifically they mention only on quantity and location. Other things they will be like, you as an auditor take a decision. They tell adequate records. Now what is adequate? Sir, that is not defined anywhere. What is adequate? What is not adequate? This is a format in which it has to be maintained. There is nothing, no clarity given on CARO. Adequacy of the records is purely left to the professional judgment of the auditor. Now what we expect is generally whether fixed assets have been tagged, whether there has been a unique number given to the fixed assets. Each and every asset, is there a number given? Correct? Is there a cost, captured properly? Is there depreciation on that captured properly? If the sale has been captured, is that the capitalization date proper? Is that capitalization date captured properly? Sir, all these things based on the experience of the auditor, you have to comment whether it is adequate, not adequate. There is no mathematical rule given, yeah, this is adequate, this is not adequate. This is purely left to your professional judgment. Clear? So this is your First point on adequacy of the records. Okay. Next year they tell whether physical verification of being fixed assets has been conducted. Now, a simple question. Sir, who should conduct the physical verification of fixed assets? Let us assume this is a company. Now they have to count how many chairs are there. Physical verification. They keep a record. 100 chairs are there. Are there 100 chairs here? Yeah, there should be one projector. There should be one podium. They'll have that record. Now the question is, who should do the physical verification of asset? I mean, is that the responsibility of auditor, or is that the responsibility of company management? Management, sir, we are very clear. Now, even here they maintain, sir, they tell whether property, plant, equipment has been physically verified by the management at reasonable intervals. Again, they are throwing this into confusion. They tell whether the physical verification have been done at reasonable intervals. Now, what is this reasonable interval? That clarity again they are not giving it to you. Now, can I tell each and every year it has to be counted? I mean, let us assume this is a company. Should we do physical verification, keep a record and count everything? Should this be done once in every year? Is 1 year a reasonable interval? Or as an auditor, can I tell no, 1 year is not sufficient, every 6 months this has to be counted? Can I tell that? Or, sir, 6 months no one would do, even auditors would not recommend. Let me take the other scenario. In one of the very well-known companies, I'll tell you, notes. In their notes, they had written every year physical verification of assets we do. In their notes, they had written policy. The policy they had written. In that year, it was not done. We told we'll go ahead and qualify. You have not done the physical verification. Then they did one thing. They took a board approval. They changed their policy. They told once in every 3 years we do. I mean, not once in every 3 years. They told this year some 25% we do. Next year some 50% we do. The other next year another 25% we do. So that in 3 years all the assets are done. They went ahead and changed the policy. Now, as an auditor, should I accept this? Not accept. Is 3-year verification, according to me, as an auditor, according to you, let us assume, forget me, reasonable interval? No, sir. Every year it has to be counted, sir. I'm not agreeing to all these things.
It depends on the size of the.
Correct, sir. Because I'll tell you. We take an example of this. Sir, every quarter we can do it. I mean, if this room is a company, sir, do it daily also. No? What is their impact? It is very easy to count. Sir, big entities, let us assume. It is practically impossible to do it on a yearly basis. Sir, 1 year, if they start on April 1st, by March 31st, they would not have completed, sir. I mean, if at all you take very large companies, they would be counting, 365 days, they would not have finished the counting. Now, owing to the size of the company, maybe whatever policy I told you, one of my clients did that. Once in 3 years we do. I mean, we divide the assets, we'll ensure that once in 3 years it is done. Is that reasonable owing to the size of the company? If an auditor, again it's your professional judgment, if you feel yes, the verifications has been done on a reasonable basis, that is okay. Correct? Now, we had a practical difficulty in that case. Somehow we initially fought with the management, we were like, this is cheating. After we pointing out we are changing the policy, you go ahead and verify that. Well, they told no, practically not possible. We'll change the policy so that once in 3 years we'll cover it. Now we had a doubt. When I'm reporting on Caro, they had covered only 25% this year. Remaining 75% they'll cover it in the next 2 years. As an auditor, should I comment in Caro telling that company decision is okay, reasonable interval is there, but this year they have not done 100%. Should I comment that, or I don't have any obligation to comment on that? I hope you understood my question.
No, I don't have any material evidence to tell that there is a discrepancy.
There is no discrepancy. They are asking, discrepancy is point number 2. Point number 1, they are telling whether this property, plant and equipment has been physically verified by the management at reasonable intervals, whether they are verified or not. Now, I don't know, because they are verified 25%. Remaining 75% they will do it in next 2 years. That is their policy. Now, should I write in my Caro, yes, they have done 25%, remaining 75% they have promised me, or in the policy they have promised that they will be doing in the next 2 years, so it is all correct. Should I write that? Or can I go ahead and keep quiet telling that, yeah, point number 1 is compliant?
So right, you have to write that they are covering over.
Correct? We were of that opinion that better to write. I mean, sir, we did not have a clarity, but we felt, why take a risk? Tomorrow, if someone questions me, why take a risk? Chalo, let us write. But while we were searching that particular thing, we got a clarity. Not required, sir. They told, as an auditor, you feel the interval is proper. In 3 years, they're covering, which according to you is a reasonable interval. Just keep quiet and go ahead. You need not write that, okay, I'm fine, I'm happy. No need to write all those things. If you feel it is not reasonable, then you comment. Else positive comment is not required. I mean, if there is a negative comment, you give. If there is a positive comment, not required, you can just go ahead. So that is the clarity which we got. So I just thought I'll just share a clarity on that. Right, sir? Now, the third point what we have to write is title deeds. We all know how to read the title deeds. If at all the asset is owned by the company, we just look at the transfer deeds or the sale deeds or the gift deeds. Some of them got a gift deeds, whatever it is, that we just look at it to ensure that the assets are in the name of the company. So if at all is a leasehold asset, suppose I am having a leasehold asset, how do I verify my leasehold asset? Then you'll have that lease agreements based on which it would be mentioned that this particular asset is on lease and given to the company. That lease deeds, if at all you verify, will come to that particular asset is on lease. So this is what with respect to title deeds. Next thing they tell us, revaluation of property, plant and equipment. Now, why does a revaluation happen? I mean, revaluation means it may be a upward revaluation also, or it may be a downward revaluation also. Suppose an asset, the carrying value of it is 1 crore rupees. So I feel no, it is very much undervalued. Now this asset is in huge this thing. I'll increase the value to 1 crore 25 lakhs upward revaluation, or I might feel that impaired. Asset is impaired, it is now no more useful. So I do a downward revaluation. What they tell us, if at all there is a revaluation of assets done, you have to comment upon that. One very important point to note here is, sir, check the amount of revaluation done. Suppose my asset value was 1 crore. I revalued it to 1 crore 25 lakhs. So that's an upward revaluation of more than 10%. I mean, they give a figure of 10%. That's a 25% upward revaluation. They tell, if at all the revaluation is more than 10%, 10% is the figure what they're giving. You have to do a revaluation only upon a valuation report taken from a registered valuer. Whoever is a registered valuer, take a valuation report. You cannot take a decision, sir. My building, sir, you know the area, super value, sir. Now I do upward revaluation of this building. You cannot take that independent decisions. However you feel, we might feel my property and all is like, now you know the rate here. In Vasan level, you know the rate, super valuation. Sir, you cannot do however you wish, you cannot do that. That is the reason they have kept a check there. If at all you are revaluing more than 10%, take a certificate of the registered valuer. Based on that, you. So, as an auditor, we have to check if there is a revaluation, whether there is a registered valuer's certificate. Else, we have to comment upon this particular paragraph. Clear? And the last point in property, plant, and equipment, they tell us on proceedings for holding Benami property. Now, what is Benami property? I mean, we would be very familiar with this word. What is Benami property? Sir, I have a company, sir. I have to somehow acquire an asset, but I am not acquiring my name, sir. Even though that's my property, there is an employee, very trustworthy employee. I will buy it in his name. Though property is mine, I don't want my name to get disclosed anywhere. So I will buy it in his name. Sir, one question here. How would I even know? You go to a company. How would you even know company has obtained property on a Benami name? How would you know? Practical aspect I am asking. How would I know, sir? Sir, I went, sir, I took a fixed assets register, sir, physical verification report I took, sir, revaluation report I took, sir. First of all, it is Benami. I mean, the name itself is telling it's a Benami. I mean, it's not a proper name. But how would I know whether the company has obtained a property in a Benami name? How would I know?
Registered document.
Sir?
Registered document.
Correct, sir. They tell that is an employee's house. He took.
Only
Only
Payment is made. I go by that, otherwise I have no clue.
Correct, sir. But, I mean, we would not make the payment directly also because I'm scared. If I make a direct payment also, I'm
I
caught.
have never acquired it at all.
Correct. So, on records, there is nothing to prove that that property is mine. Correct. We had this doubt. Then I thought, why are they putting this in Caro? Caro does not ask us to comment whether the company has a Benami property. That's foolish because how would I know? That you only don't know that whether it is in proper name or not. How would I know as an auditor? That is not the comment what we have to make. Benami property they tell if there is a proceedings initiated. Sir, you as an auditor don't go behind and check employee houses. Where did you get this money? Sir, we need not do that verification, sir. Under Benami Act, If at all there is any proceedings initiated against the company, then we have to comment upon this benami. Else, unnecessarily we don't need to go and investigate whether there is any benami property. That responsibility is not ours. Clear? So this is your first point on property, plant and equipment. The second point what we have is on,
Is there a portal where it shows whose case is and the proceeding is going on?
I
Because
don't know.
company won't give it.
no, it is similar to disputed cases. For example, sir, we take a list from the company. Which all cases are pending? I mean, suppose there would be a service tax case, which will be pending before the High Court, or it would be pending before that appeal, Commissioner appeals, whatever it is. That disputed cases we give a list. So we go ahead by that approach, or we put a legal cases pending against the company, or the this thing, contingent liabilities if there is anything. So how what approach we take for that?
Company won't provide. So is there
No, similar treatment is what I am
similar
telling.
to?
Similar treatment is what I am telling. So we go by standards on auditing on this. Like how would they tell us to take these details? How do you deal with contingent liabilities? So we just go ahead with that particular aspect. I mean, it is similar to that. I mean, if they don't disclose, they might not disclose. I mean, there is evidence almost. I am losing the case. I have to create a contingent liability. I feel like pakka I lose this case. Company may not tell that. Similarly, it comes under similar grounds. So your second thing comes is inventory. Under inventory, this is first point is property, plant and equipment. Second point is we comment upon inventory. So again, this is a very crucial point. Here we comment upon two things. The first thing is whether physical verification of an inventory has been done. Was there any material discrepancy found during physical verification? Sir, sir. We don't know. When we were doing a physical verification, we did not find few assets. Was there any discrepancy found like that? And how was that dealt with in the books of accounts? I mean, did they write off that assets or what actions were taken? So that is your point number one. Point number two, what they tell us, this is a new thing what we'll be commenting upon that now. If at all I have given my current assets as a security and I have borrowed money, suppose we do, whenever we are borrowing money from the banks and all, we give our stocks as a security. Correct? So if at all we do that and the value of that is more than 5 crore rupees, correct? We have to give a quarterly statements to bank. Generally you would be knowing that every quarterly statements we have to give it to bank. Now we have to compare whether that quarterly statement is given to the bank and the closing stock that is shown in the books, are those matching or not? These are the 2 points what we cover. Now addressing the first point, they tell, again they come to the same issue of property, plant and equipment, same confusion. They tell whether physical inventory or physical verification of inventory has been conducted at reasonable intervals. Again they leave it as professional judgment what is reasonable interval, but now we cannot tell, sir. If at all a company comes and tell, sir, inventory will verify once in 3 years, sir. So property, plant, equipment, understandable. Okay, once in 3 years, fair enough. But inventory, professional judgment, I am telling. If at all they tell once in 3 years, we cannot tell, I felt okay. Professional judgment, no sir. Professionally, I felt, okay, let them do it, sir. Once in 5 years, let them do it. I don't have a problem, client doesn't have a problem. Professional judgment, you are leaving it to my judgment. I will decide, 5 years, okay, sir, reasonable interval. Here, we have to be a little careful. If at all there are policies like once in 3 years, I will verify inventory and all. I mean, according to me, it should not be the case. Inventory has to be done on a yearly basis. Correct? Physical verification of inventory has to be done on a yearly basis. But that they can split between the years. I'll give you an example. One of the companies, one of my clients where I handle, they have huge inventory. Very smartly they are handling that. What they are doing, they are categorizing inventory as A, B and C. What is category A inventory? Huge raw materials, costly raw materials. Category A. Category B is a little lesser value. Category C is consumables. I mean tools, consumables like that. What they do is, category A they will verify every quarter. They'll have their internal auditors with them. They'll have company from different departments. They'll verify raw materials or category A stock every quarter. Category B and C, what they do, they'll cover only 25% per quarter. I mean, every quarter they'll verify 25%. So that once in a year they verified everything. Now these things are called as verification is being done at a reasonable interval, because we feel okay, even though they're not checking again and again, in that year 25, somewhere they're checking and they're completing it. This can be treated as a reasonable interval. Correct? So this is what it is. And moreover, one very important point which was not there in your old Caro but which has come in your Caro 2020 is, if at all discrepancy of more than 10% in each class of inventory is found, then only we comment. For example, sir, I do inventory verification, I not find 2 stocks I not find. So 10,000 rupees each. 2 stocks are not there, sir. Sir, as an auditor, should I comment upon that? They tell not necessary. One stock not found, two stock not found. Don't go by that. You check the value. If the value of discrepancy is 10% or more of the total stock, only then you cover. Then only then we comment. Okay. But here there is a catch. What catch? They tell 10% or more discrepancy in each class of inventory. For example, I tell you, our client example I took class A, class B inventory. So class A, I'll have a discrepancy of 12%, positive discrepancy of 12%. Class B, I'll have a negative discrepancy of 11%. Correct? Now the net difference, overall stock if I take only 1% variation. Now should I comment on this or I should not comment? They tell yes, you have to comment. Why? Even though consolidatedly if you take there is only 1% variation, they tell 10% variation in each class. I take a class A, there is 11% variation. I take a class B, there is a positive variation of 12%. Even though the net variance is only 1%, but if I go by class wise, there is a discrepancy of more than 10%. So I have to comment upon these things. This is your inventory. The second point of inventory, what they tell us, that's what, as I told you, if at all you have kept your inventories on security and if you have borrowed some money, the quarterly statements be due. So this is a very problematic thing what is happening in smaller companies. I mean, big companies, they maintain proper inventory, proper valuation. I mean, any big company, major area, what we have found very difficult to deal with, or according to us, we cannot tell 100% accuracy is inventory. I mean, most of the cases wherever they manipulated, wantingly, unwantingly, variations are found in case of inventory. Correct? So what they do is they give that quarterly statements to bank. In order to enhance their OD or their credit limits, they would have enhanced their stock figures and they would have given, or else they'll reduce my limit, sir. So they'll give that enhanced stock figures. So now, in order to curb that, what they're telling is, in Caro we have to report whether that quarterly statement submitted to bank is matching with your books of accounts and is that accurate. So that is what they're asking us to cover. Clear? So this is your second thing what you comment in your Caro. First thing is property, plant and equipment. The second point what we comment upon is on the inventory. Clear? And the third point what we comment upon is investment guarantees or securities or loan given by the company. Correct? So one thing is, can a company give loans? First question, before I start with this discussion. Can company give loans to other people? Directors? No, sir. Sir, other entities, can they give a loan? Can company start giving loans to everyone? Generally, no. I mean, subject to that Companies Act requirements, resolutions, whatever it is. Generally, company they tell it cannot give a loan to anyone. Correct? So that is one thing. So coming to this, investment guarantee securities or loans or advances, they are asking us to comment upon whether during the year company has made any investments in, provided guarantee or security, has granted any loans or advances in the nature of loans, securities or unsecured to companies, firms, limited liability partnerships or so. Sir, one thing, there is a huge thing that they give a list to comment upon. Major thing what I just wanted to touch with is, they want us to comment upon the loans which are outstanding for more than 90 days. I mean, we need not give a list, company has given a loan to him, company has given a loan to him, company has given a loan to him. That we need not comment. They asked us to comment on the loans which are outstanding for more than 90 days. Sir, one practical aspect or one thing what you have to be very careful here is, any loan outstanding for more than 90 days attracts this point. As an auditor, auditor will go and comment upon this. Manipulation, how they do. Sir, as on 31st March, the loan period outstanding, suppose it is 180 days. Now that comes as a comment here. What they do is, on 30th March, they'll advance a fresh loan. I mean, they'll take back that loan and they'll advance a fresh loan. So that if you take a aging of that loan, it shows us 1 day. So loan is given only 1 day back. That is how it looks. But practically, that's an old loan. So these kind of manipulations would have happened. So that is the point where we have to be a little careful. Correct? No fresh loans have been given in order to regularize the old loans. So that point we have to be a little careful. So this is your third point on loans. Correct?
So they give loan to husband
Correct.
and within 90 days they wife.
Huh.
Then will that be included?
Sir, again, husband is a related party or not a related party? We'll take both. Okay. Sir, now what happens? Unrelated party. Okay. Now, unrelated party means we have to focus only on that clause, because if that's a related party, I will be just starting next section 185, 186, what Ravi sir just spoke. All those issues come. Sir, in order to just regularize, you take it from husband, director. Husband is a director. You take it from him, give it to his wife, sir. All these provisions will occur. Let us assume unrelated party. You take it from you give it to wife and then do it. Sir, if it is very evident, like how we did, give a fresh loan in order to ensure that the old loan doesn't look very old. Sir, if these kind of willful manipulations have happened, then you can comment upon that. Like how we told, going by the similar example, suppose you would have taken a loan from the company, which is outstanding for more than 180 days. Now, in order to ensure that this clause is not attracted, I'll give you a fresh loan on 30th March and you repay that loan on 30th March. Now, if I take a aging as on 31st March, the loan given to you is only 1 day. But in fact, that is 181 days. Correct? So, these kind of things has to be pointed out. I mean, where the actual substance is more than 90 days, but you're trying to manipulate it willfully, that comes as a comment. Then we have to comment. Because, how sir, multiple entities?
Multiple corporate entities can be created.
Okay, I mean, husband separate company, wife separate company.
A limited is you, and then you do someone else.
One second, I'm not able to hear you.
They are not including all the books of accounts.
Correct. My client's books of accounts are audited.
My client, understood. But my client has gone to A Limited company, another company. A Limited has transferred funds to C Limited. I don't know it.
Correct.
I don't have access to it.
Correct. That is none of my concern, sir.
From there it is routed somewhere else.
Correct.
Those routings are.
Let them do routing, sir. My concern is, I have given a loan to A Limited.
Yes.
After that, what did he do? I don't have a control over that. I have given a loan to A Limited. A Limited, whether he has borrowed me, whether he has repaid me or not repaid me for more than 90 days. That is my only concern. If A Limited has not repaid me for more than 90 days, then I'll comment. Right, sir? That was your doubt. I'm sorry?
They can corrected entities can be created.
It can be created, sir, but in my books, to whom I have given a loan?
A.
Is that loan outstanding for more than 90 days?
No.
Then don't comment. Then he would have repaid it to me. Then I'll give it to B is what you are telling.
Yeah.
Then B will give it to A. Correct?
Yes.
So, sir, if these are not related parties, as you told, different unrelated entities, then no comment, sir, because A is someone, B is someone. Internally what they do, that is not my concern. Correct? Okay. The next. I'm sorry.
Common auditor is same for both the entities.
But he knows about that, sir. I mean, I'm an auditor of my client, and I'm an auditor of B also. Then you are telling legally we don't know, but insider information I have it. No, that won't work, sir. I mean,
After that, sir, you should read the motto now.
Huh?
Read the motto of the institute. You are supposed to be awake and find out everything.
Correct. Sir, that is there, but again, we can't go into investigations, audit. We just do audit here. Okay. The next point, what we comment upon is the fourth point is on compliance of provisions of section 185 and 186. 185, Ravi sir just explained you. Transactions with directors. 186 is loans and advances given or transactions with other related entities, correct? So whatever, he just took a session and whatever things he told, you have to check who is my related party, what all transactions you have to take it with him. So all those things has to be covered here. One important point, what comes here is, he was mentioning about that form MBP1. Sir, I don't know, sir. My directors I know, sir. If I go to MCA 21, I'll know the list of directors, sir. But in which entity my director is interested in, how will I know, sir? My director may be a partner in one of the firm. How will I know? Unless and until he comes and voluntarily tells, How will I know that he is a partner in one more firm? If at all he is a director in one more company, I will come to know. Correct? But if he is a partner in one more firm, how will I come to know? Unless and until he discloses that. Here comes the picture of whatever he told. That first board meeting where they disclose the interests in other entities, and wherever they find this form MBP1, these are the documents what we take. MBP1 is one document. Second thing is the registered maintained under 189, whatever he just covered. That 189, whatever registered are there, if you take that, you will come to know who are your directors and which are the entities in which your directors are interested in. So with that, you will come to know the transactions with related party. Clear? So this is your para 4. Here comes a very interesting point, that is your point 5 on public deposits. So before I tell you what is a public deposit, I just want to understand who takes a public deposit according to you. Who takes a public deposit, and which type of company takes a public deposit?
Bank.
I'm sorry?
Banks and NBFCs.
Banks, NBFCs, or public companies? Public companies take that public deposit. Private companies, no sir, private companies will not take or are not allowed to take public deposits also. Private company there is a restriction, so we should not be taking a deposit from the public. But one point what we generally miss out is, in Companies Act, sir, once you look at the balance sheet, there won't be any deposits. I'm auditing a private company. In private company, there are no deposits taken from public. I mean, there are nothing like that. So I would just ignore this particular part. I would say, okay, chala, there are no public deposits taken. But the catch here is, there is something known as deemed deposits. Correct? There is something known as deemed deposits. Sir, what is that deemed deposit? So if you read Companies Act, they tell certain things which are not directly deposits. I am a private company. I not directly take deposits from public, but I do certain transactions which are considered as deemed deposits. Sir, how is that possible? Example. One of the point in which they tell deemed deposit is, suppose I am a company, you are my client, customer, I take an advance from you. I take 10 lakh rupees of advance from you. Why will I take an advance? So that I will supply you goods or I will provide you services. They tell, if at all you take an advance from your customer, you have to raise an invoice or you have to refund his advance within a period of 365 days. If you don't refund within 365 days, or if at all you don't raise an invoice against it within a 365 days, that will be treated as a deemed deposit. Sir, why would they even do that, sir? Example, I am a private company, somehow I need money. If I directly come to public and take money, then it's a violation because a private company cannot take a public deposit. I try for an indirect route. What indirect route? I will enter into an agreement with you where I promise you to supply goods. I take an advance of 10 lakhs. I do this transaction with 100 people. 10 lakh, 10 lakh, 10 lakh, 10 lakh for supply of goods. I show it as if you are my customers and I will supply you goods and I take an advance. But I will never supply goods to you. So these kind of manipulations, whenever that was found by your Companies Act, they told no. If you take an advance, supply goods within 365 days or refund his money. If you don't do that, that will be treated as a deemed deposit. These particular aspects we miss out. What I am trying to tell you is, whenever we are reporting under CARO, I have many times seen that private companies, these type of paras we ignore. You will be like, public deposits, where will a private company take? Ignore. No sir. A keen this thing has to be given to these kind of deemed deposits. Wherever deemed deposits are there, many private companies are facing, there will be advances which are not adjusted for more than 365 days. If you don't comment upon those things, then it will be wrong from the auditor's point. I mean, we were supposed to comment upon this, but we have not commented upon this. So this deemed deposit concept, we have to focus. Clear?
Is there exception for a builder or developer?
Correct, sir. I'll come to that. Now, what happens? There is one problem here. This happened in one of our clients. What they used to do is, dams. To the dams, there will be walls. Correct? So once they, like a tap, once they open that wall, water passes through that dam. Once they close that wall, it does. So that's a very big wall. I mean, that will be the size of this building. Once they get an order, they used to take nearly 1.5 to 2 years to complete one order. Correct? And they not start doing this without an advance. So they would have taken an advance, but they actually raise an invoice only after 1.5 years because it takes time, sir. I mean, I cannot tell because of Companies Act, hurry up, you have to finish within 1 year. I cannot tell that. It's a business.
Reasonable.
Correct, it is reasonable. Now, an exception what they tell here is, if at all it is in relation to a capital good, I mean what you are selling is a machinery or a capital good. If these kind of goods are there, then that's fine. We will not consider it as a deemed deposit. That is specifically given by your Companies Act, and that exemption that you give. That is one thing.
Residential flats. Residential flats. Same analogy.
Same knowledge. Because again, it's a capital good. I mean, now Shobha developers or someone is
For
there.
them, it's a revenue.
Correct. For them, it's a revenue. But sir, asset type is
Nature of
nature of asset. Nature of asset is a capital. It is not some laptop. It is not some furniture. It's not like that. It's a big asset. So capital type of asset. For me, it's a revenue good. But nature of asset is capital. Correct? This wall, whatever I told you, or the building, then it will not be attracting the deep deposit. And moreover, one more point. Suppose I take a security deposit. Major point what we come across again and again is this security deposit. Sir, some vendor will come. I don't believe him. I'll be like, keep some security deposit and then start dealing with me. Sir, he would have given a security deposit. His contract is for 2 years. Now what will I do? Is this security deposit becomes my deemed deposit? Will there be a violation of Companies Act? Will there be a penalty under section 73 to 76 of the Companies Act? No, sir. These kind of exceptions, security deposits or these kind of capital advances, these things are fine.
and the share application money beyond 60 days.
Correct. Share application money beyond 60 days. There is a list given in that 73 to 76 section of Companies Act. So those are the areas where we have to focus. Even when we are doing an audit of a private company, we should be focusing on these particular areas. Clear? Sir? No. They give only reference to 73 to 76 of the Companies Act.
Rules.
So that we have to go to the Companies Act and then we have to refer. In guidance note, they will not tell this is added, this is not added. We have to go to Companies Act 73 to 76 section and then we have to refer. There it is given. In that and that section 2, what is the deposit? They define what is the deposit. In that they will define what is the deposit. So we have to refer to that. I mean, in Caro guidance note they will give it. They'll just give a reference to that rules and section and they'll give it to us.
Sir, creditor paper due more than 3 years, that need to report in this clause.
No. How will that become a deposit to me?
Morning, MP Vijay Kumar sir said that in aging report,
Correct.
outstanding more than 3 years,
Correct.
that is considered deemed to be deposit.
Advance or no.
Creditor's paper.
Correct. But how that becomes? I have not taken any deposit. What am I just asking you, sir?
Yeah.
Simple accounting entry.
But morning sir said that it is deemed to be considered a deposit rule applicable.
Under Companies Act,
Yeah.
I need a clarity on this in that case. Because according to me, deposit is what I have taken. I should not be taking a deposit, but I can give it.
So if the payment to the vendor is not made more than 365 days, and then it becomes more than 3 years, it will be treated as a deemed deposit, like how you stated in the real estate sector.
Correct, but how will that become my income?
Deemed as a deposit, whether that will be
Deposit given or deposit taken?
deposit taken.
No, creditors only. Because why am I telling you this? Deposit means I have taken a deposit. Whether you name it or not.
So even if it is advances also considered as advances, so it's not a deposit.
Correct, but I have taken it. I have taken the money.
Yeah, here also you have taken the material, you build up material, but you have not paid the amount for more than 3 years. In that case, it is considered as deemed deposit.
Okay, so you are telling I have actually taken the material,
Yes,
but I have not paid it.
yes.
Correct.
So in that case, it will be considered
Correct.
as deposit.
Correct.
You have to report it in clause.
Correct. Because there could be a manipulation. Again, coming to the logic, what we started this question with. Instead of taking money from the public, I would take some goods from the public but not pay. Then convert these goods to cash. Correct.
And also the loan taken from shareholder also will be considered as deemed
Correct.
deposit.
Correct. All that list is given, sir. I mean, in that section 2 of the whatever they define as deposit, all these lists they are giving it there. All those things, or employees, everything. There is a big list which is handled. What am I trying to tell is, one of the examples why I just took is,
Ideally, when it's more than 3 years, this company should say that it's a time barred credit. I did not
Limitation Act.
I did not pay. You should write it back.
That is how generally we do.
That's it. not accepted the public deposit.
Correct. 3 years limit, it is a time barred debt as per Limitation Act. So we'll be like, no, we'll not pay it right off.
Write back. That's it.
So long as you keep it in a liability, you can't say that I can take
defense and the time bar debt, you must try to convert that into income and then say I will not pay. Only then. If it is in the liability, it still continues.
What I'm saying is that after 30 years, we'll write back.
Right back. If it becomes income, then it is fine. It goes out of your balance sheet altogether.
Liability is no longer payable, it charges as revenue and
As
goes
big
in.
as a public
Back
deposit.
into the income and
Right. Next. And the sixth point, what we comment upon is, again, this is an interesting point. They asked us to comment upon the cost records. Sir, there is a cost audit. Companies that tells that to certain this company, cost audit is mandatory. Apart from statutory audit, what obviously we do, cost audit is applicable as per 148, section 148. Now, in Caro, they are asking us to report upon the cost records. Now, one question, primary question is, see, that is what they tell. They tell whether maintenance of cost records has been specified under section 148. Yes, 148 to this company it is applicable, not applicable. Let us assume, yes, to my client it is applicable. Cost audit is applicable. And whether such accounts and records have been made and maintained. So, what do you mean by made and maintained? They are referring to accounts have been made, I mean, have they prepared that accounts? And records have been maintained. Costing records have been maintained. So, here the question comes as, sir, we had one paper in finance as costing. One paper which we have cleared. Correct? Somehow we have cleared it. But in regular practice, we don't have depth knowledge of costing records, how costing needs to be done. Sir, there are cost auditors for that, sir. Company has also appointed a cost auditor. Cost auditor will verify all these things, sir. He will do a cost audit and he will give a report, sir. Then what is that I need to comment? Should I be so competent to tell, yes, costing records are proper, valuations are proper, costing records have been maintained, all the required this thing have been done? Should I also have the same level of capability as that of a cost auditor? Is what is expected by Caro? Sir, how will I know, sir? Costing records, no, sir. I'm not that well versed. Auditing, I know, sir. To that extent which is affecting the financial statement, I know, sir. Inventory valuation or production variances, this I know, sir. But entire costing, what cost audit has to be done, there is a separate cost auditor which is mandatorily appointed by the company. He is doing a cost audit. He is giving a cost audit report also. Then what is that as a statutory auditor? What is that I have to comment? Sir, one clarity here is, I need not comment about the true and fair view. Sir, accounts I will tell, true and fair view I will comment. Costing records, costing records or cost accounts, is that giving a true and fair view? I need not comment upon the true and fair view. Sir, what they are telling is, if you look at the lines carefully, they are asking you to comment upon whether cost accounts have been made and records have been maintained. Sir, as long as it is not affecting your financial statements, if you verify, yes, cost audit is applicable, costing records have been maintained and accounts have been made, then it is more than sufficient. You need not go into depth to verify, yes, is that correct? You need not replace your cost auditor. That is not the responsibility of us. To this extent, if you verify, that will be more than sufficient. Clear? Now, this is a very important point of all the things. Your point number 7 is on statutory dues. Just to ask you a question, sir. What they asked us in Caro, they tell, as on the balance sheet date, if there is any statutory due outstanding for more than 6 months, then you give a list of that. Simple. Caro point number 7, they are telling, if there is any statutory due as on the balance sheet date, more than 6 months, you give a list of that. That is first point. Second point, they tell, if at all any statutory due is under dispute, that disputed statutory due, you give a separate list. These are the two things which they are asking us to do. Just to ask you, what is the approach we take? We generally take balance sheet. Sir, as on the last date, whatever GST payable, PF payable, PT payable, TDS payable, whatever statutory dues are there, we take a list, sir. We take a aging. I mean, from how long it is pending, we take a aging. If it is more than 6 months, we comment. That is the approach what we are taking, generally. But what are we missing out here is, sir, suppose they tell GST or your income tax, or if you, there is one thing highlighted here, they tell any statutory due. They use the word here as any statutory due. Sir, now the question comes is, suppose company would have imported a good. Sir, what are you supposed to do? First, the goods comes to your customs area. Once you import a good, that comes to your customs area. From there, you are supposed to clear your goods and bring it to your factory. Correct? Pay the customs duty, pay IGST, RCM, whatever it is, then you have to bring it to your factory. Sir, what if you don't do that? The goods will be lying in the bonded warehouse. Customs has something known as a bonded warehouse. In that bonded warehouse, your goods will be lying. So you cannot keep quiet. I let it lie. Whenever I have money to pay customs duty, I pay and bring it back. You cannot do that. So beyond a certain time, you cannot leave the goods in the bonded warehouse. If you leave it in bonded warehouse, they impose interest and they impose rent on that bonded warehouse. These are the two charges which they impose on it. Let us assume, in balance sheet, company has not recorded it. They imported a goods which is lying in the bonded warehouse, which they have not cleared beyond a certain time. In balance sheet, they have not recorded, accrued that interest and rent on that. So that's a statutory due. How am I supposed to know? If at all we go by our approach, I mean, I'll take all the statutory dues, whatever is appearing in the balance sheet, that I'll take aging for each of the things. So if I go by this approach, this is getting missed out. Correct? So you have to be very careful. Things which are not recorded in the financials also. If that statutory due is more than 6 months, you'll have to be commenting here. One more surprising thing I'll tell you. Sir, how many of you commented advance tax here? Advance tax not paid. That comes here. I mean, majorly what I've seen people missing out is, sir, you are supposed to pay advance tax quarterly. Sir, I have not paid advance tax, sir. Sir, advance tax is a statutory due. Sir, if advance tax is not paid, you should be commenting upon the statutory dues not paid for more than 6 months. Correct? These are the minute things which has to be observed while you are commenting upon the statutory dues pending for more than 6 months. Right, sir? Okay. One more thing. One more, just a doubt. Sir, something was payable in May, which I paid it in January. Sir, more than 6 months, less than 6 months? More than 6 months? But I paid. As on the balance sheet date, it is not pending for more than 6 months. Do I comment or not comment on this? The question is, I was supposed to pay it in May. I did not pay. I paid it in January. Sir, more than 6 months I did not pay. In January I paid. Now, as on 31st March, it is all regularized. There is nothing pending for more than 6 months. The question is, do I comment in this clause as an auditor?
Yes.
Not comment.
Yes. You have to comment, but we won't comment.
But correct. Now, this was a major confusion what we had. Sir, they are contradicting here, sir. I mean, they tell whether the company is regular in depositing statutory dues, and at last they tell 6 months from the date they become as on the balance sheet date. I mean, see, as on the last date of the financial year. So now it is contradicting. My first line and fourth line is contradicting. We had this confusion. What clarity we got is, sir, don't comment as due, because as on 31st March is only you have to comment what is due. Sir, as on 31st March it is not due. Sir, I paid it off in January. So nothing is due as on 31st March. But because of the first line, they tell, is the company regular in depositing? You make a note there. What we are doing is, we are writing a note telling that yes, there has been an irregularity. Company is not regular in paying. Company was irregular in paying. However, as on 31st March it is regularized. Don't tell it is pending, sir. It is pending for more than 6 months. No, don't comment upon that because it is not pending. But this note has to come in this particular paragraph. Okay? So this is a clarity on statutory dues.
So there is a famous practice of using word generally regular. So whether is it legal? Because
Okay.
I have seen in
I understood your concern.
reports that is being captured by the mid-sized firm. Generally regular things. Still, can an auditor be safe?
It's like saying regularly irregular.
That is different. Negative assumption, positive assumption.
Okay. Sir, on a serious note, what is generally a regular gain? What I understand from my understanding is, this is how it works, but there are exceptions.
Yeah.
Correct? I cannot tell 100% of the times this is how it works. I'm not that confident, sir, but this is how it works. But there could be certain exceptions. This is what is generally.
No, what I am asking is, the intellectual brains are adopting this word, the auditors,
They're acting
to
smart.
safeguard and not to disclose what you told in between, delays in between. Still, can this act as a safeguard for an auditor?
No.
That's what I am asking.
No.
So,
it cannot.
I can't add the carrot in the carrot, whatever I want. That is not allowed.
You cannot tell, generally they're okay.
Like that I can't. That I wanted to understand.
Correct, correct.
Generally, nothing is safeguarding auditors.
Only it's a temporary
Sir,
feeling.
one this thing is, first of all, I told you there is a copy paste culture. I mean, not in big companies maybe, But you'll have 20 clients, private companies where your articles will not have that much of patience to read all the report, point out each and every point, they'll copy paste. If they tell generally auditor is safeguarded, then we'll go ahead and generally the books of accounts is giving a true and fair view. So okay, we are good to go. So we'll adopt that kind of culture. So according to me,
Nowhere people adopt, especially here. I have seen even some Big Four reports. I have seen.
one more reason I tell
With
you.
due respect.
Yeah, correct. One more reason I tell you. Even I was in that position. Even I would be writing that. Why I tell you? Sir, GST I understand. I can catch hold with this. Advanced tax, PF, ES, everything I can catch hold. Customs, as I told you, I'll go ahead and check if there is anything in the bonded warehouse. I'll go ahead and check that. Sir, maybe there is some violation of pollution control code or some violation under environmental board. Sir, I would not even know that correctly. Correct? Your standards on auditing tell, yeah, you have to verify all those things. But I don't know. There could be some regulation which, according to me, maybe remotely company would have violated that. So why would I take a risk telling that 100% it is correct? According to my knowledge, to the best of my this thing, generally it is.
Generally.
That is why they comment. Because this risk is there. Even if I was in that position, this risk is always open. Right? Even though I feel, yeah, I'll do my best, I'll do pakka audit, even then this risk is open. Sir? I'm sorry? That's a wrong culture what we have, sir, unfortunately. Correct. This is the, I mean, we are all professionals, but this is a very unhealthy thing what is happening between us. What we do is, whenever we are negotiating with the client, previous auditor was charging 2 lakhs. I'll be like, I'll charge you 1.5 lakhs. I'll get a client. But after taking 1.5 lakhs, I feel for 1.5 lakhs should I have to do so much? Then I'll compromise on the quality. I mean, though we tell this is wrong, this is what is happening. But according to us, it is wrong, sir. I mean, professionally, we should not be accepting that engagement itself. I mean, if at all it is not commensurate with our efforts, we should be very brave to tell no, I'm not accepting this engagement. Correct. We should start that culture. Yes. I mean, we should take that first step to tell this. I mean, more or less we are doing that. I mean, in our office, we don't do that. GST, sir, they will take 500 rupees, nil return 100 rupees. We have stopped taking all such kind of assignments. I mean, we don't want to interfere in that 500 rupees negotiations. So, correct. No, one thing I remember, I had this discussion with Ravi sir one time. I mean, sir, clients don't pay us money, sir. We take so much of efforts. With full, as if it is my company, we'll do auditing. They don't give us so much of money. So that's what one very good thing he told me. I still remember that. He was like, don't accept that engagement. If at all someone is telling, take only 50,000, sir, 1 lakh, don't accept it. You wait for a client who pays 2 lakh. I mean, if you feel, yeah, 2 lakhs is a good amount, you wait for them. Over a period of time, you'll have that kind of crowd. I mean, he was telling you'll have clients who pays you to that kind of, that will be the, that will be the crowd of your client. So I think that was a very good advice. I mean, I still remember that advice what he gave me a long back. So we have to start that. Right, sir. Okay. Sir, I'll have more time. So the next 8 point what comes is unrecorded income. Sir, again I come to my Benami property point. Sir, what is unrecorded income, sir? Name itself is suggesting company has an income which is not recorded. Sir, without recording, how will I come to know, sir? Company has not recorded its income. But how will I know as an auditor there is some unrecorded income? How will I know? Sir, again, if you look at the lines of the CARO, they are not asking you to go and investigate how many unrecorded incomes are there, you go investigate. They are not telling that, sir. They are telling whether any transaction not recorded in the books have been surrendered or disclosed as an income during the year in tax assessments under Income Tax Act 1961. So, whether there was an assessment under Income Tax Act, in that Income Tax Act the company is caught, income tax officer is telling yes there is some undisclosed income you have, that has been dealt with in the books. In this year they have told, this was an undisclosed income which I am caught in my income tax assessment, now I will add that as my income. whether such transactions are there. So you need not go haunt, is there any undisclosed income? You need not do that, sir. If you look at income tax orders or whatever income tax transactions are going, with that we'll go ahead with this particular paragraph. Okay.
Sir, what about during the year, part of the assessment under 56 to 7B, they ask you to pay the tax?
Other sources.
Yeah, other sources and this thing. Would that come as unrecorded income or?
No, sir. They would have recorded.
No, they would have recorded. So,
It will not come.
But it would have come as income in this current year.
Correct. What they're telling is, they're not telling unpaid taxes. They're just talking about undisclosed income.
Okay, so
56 to 7B. Suppose my share value is 100 rupees.
Right.
Fair market value is 150.
Right.
Fair market value. But I issued it at 200.
That 50 is.
That 50 rupees, the difference between 200 and 150, that is here 56 to 7B, that income from other sources. Yes. Correct. While recording the journal entry, I would have recorded as the 200 rupees I've got. 200 rupees I've got. 100 rupees is the face value, or 100 rupees is the premium. I would have recorded. So that doesn't come here.
These are the 147 cases, right? Income escaping.
Income escaping assessment. Yeah, this is relating to tax. I mean, I have shown my income, but I have not paid sufficient taxes on it. I was supposed to pay as income from other source, which I have not paid.
No, I wouldn't have shown it as my return. I wouldn't have shown this 50 rupees.
Sir, you are telling in my P&L I would have not shown, but I would have capitalist.
Under security scheme, I have not shown it as income. In this assessment, you are
But you should show me, sir. Once you get 200 rupees, I should record 200 rupees.
No, I've shown 200 rupees. I've shown 100 as face value, 100 as
security premium.
Now in income tax returns, I'm supposed to show 50 as half of 50 as income, which I didn't do.
Correct.
This year he came and caught me. So now would you still call that unrecorded income?
No.
Or,
No, it is just a tax evasion.
Okay.
I've evaded taxes, but my income is disclosed. It's not an undisclosed.
Sir, there is a search in a premises for a 6 years assessment. They are gone for appeal, and undisclosed income is there that they are not capitalized or they are not brought into the books. How it has to be disclosed?
Then you have to record here, because they tell you two lines, ma'am. First thing they tell whether there is any undisclosed income. Second point, see, they tell if so, if there is any income tax assessment and if there is any undisclosed income, whether the previously unrecorded income has been properly recorded in the books during the current year. That is why they are asking you to write that second line. Suppose if there is an undisclosed income, but I am not recording it in my books of accounts, you have to comment. As an auditor, I have to comment
It
there.
was a search case and they are in the appeal. Now they have come to us. So now I noticed it. Should I record it in that?
Ma'am, have you acknowledged that?
I have acknowledged it. Like means I have seen those things and I have given in a report that they were into the search and they are gone for appeal.
No. Income tax department would have given a report.
Yes.
Has the company acknowledged, yes, I have not recorded that income. I mean, that income was suppressed. Has the company acknowledged or?
They have gone for appeal.
Sir, then that's a disputed case. That's not my undisclosed income. That is a disputed case. I mean, statutory dues under a dispute. That's a statutory due under a dispute. And again, I tell you, that clarity also they will such beautifully they give. Dispute as in, I'll tell you. If you make a representation, suppose as you told there is a raid, they'll tell you some 10 crore rupees you have not disclosed. I make a representation to them telling that no, I have an evidence, this is not undisclosed income, I'll make a representation and I'll counter that. Is this disputed? Now they tell no, this we cannot take it as disputed, this is your actual liability now. I mean, statutory due. Now when will it call be disputed? Ma'am, suppose I go to Commissioner Appeals, I tell no, he is unnecessarily passing orders on me, I am not paying, I go to Appeals, I go to High Court. That is disputed. Now that comes there, here it will not come.
Okay, in that case also they have gone for some NDS scheme and they have paid the tax. There they have accepted it.
Correct. Now you have to write here. You have to write it as.
That is in the previous year where the other auditor has signed it. He has not even declared it. He has not got into the books. So
Correct. This year you have to bring. I mean, that is what they tell.
That is the very purpose of this.
That is the very purpose of this.
And Caro is not applicable to them.
I mean, you are telling a small company doing a bigger fraud. So Caro is not applicable.
Companies there, you know that, right?
No, then where will I report? If you want to feel safe, an audit report you give. I mean, don't clarify. I mean, you just tell, this is what was found.
I have given it.
Just emphasis that.
Emphasis, this thing I have given it in the
Yeah.
So, but now I
Yeah, emphasis matter, we'll just give it. I mean, if at all you feel, yeah, this is big fraud in a small company.
So even if it is not in car, you will have to still do it in Schedule 3, no? That has been amended to.
Yeah, in Schedule 3 I have given it.
Even that is applicable even for a small company. For all companies it's applicable. So there you will have to do it.
Correct. Caro, yeah. Caro if not applicable, I'll not, for this particular point I'll not add Caro. That is clear.
Two questions on statutory dues. From current year onwards, this updated return concept is came in, right? So, say for example, practically what we are facing is certain companies where we couldn't finalize the audits, right? Those have been finalized subsequently after the due date, or even after due date of revised return filing, after the 31st December. So after finalizing, we come to know that yes, you have to, this is the revised tax liability. Company has discharged the liability as well, but you're not able to file your revised tax return because of system utilities. It is giving some errors. So there's a penalty also which is associated with it. Right? So how do you treat that penalty? You have paid the penalty of the first pay. Because of the portal issue, you have represented, you have sent letters to the, you have raised the tickets, you have that proof, but will that also be a pending statutory liability?
Yeah, it's a statutory liability, but not a disputed liability.
Right, but whether that will come in the other clause?
Correct, it comes. Because that's your statutory liability.
No, but you have paid the tax liability, but you have not filed the return only. Penalty, even if, say for example...
Now what happens, I got your question. Once you pay the taxes, tax part is not my liability. Because how much ever I was supposed to pay, I paid. But since I have not filed my returns, there is a penalty increasing on that, accruing on that. Correct? Some or the other day I'll have to pay that.
No, but company is genuinely trying to file it.
Sir, whether recorded or not, that's what. When we took that statutory dues, certain things like bonded warehouse example I took, where there will be interest and rent accruing on that, which is not recorded in the books. But we have to record it.
That is intention from the company, but your intention is the company is trying to file it genuinely and representing also. So in that case, what would be the solution?
I mean, in books, how would you treat? Will you create a contingent liability? Or will you strongly feel not even a contingent liability?
The company would not be would be paying that even if in future.
That will be paying?
Will not be paying it. We will not be paying it because you have already tried and paid the taxes because of systems, IT systems portal we are not able to file it.
Sir, now you feel I will not pay. Companies and will be like, what wrong I have done, I will not pay. But will that work? I mean, you don't have a guarantee that you need to.
It's not small, it's close to about 25 to 30% of your tax amount.
Correct, sir. Correct. Now, when that's a material thing, you feel I am right on my part and I need not pay. Any statutory dues, you feel I am right on my part, I need not pay. But it is accruing. I mean, sir, I feel many things. That's why I go to appeal. I go to Supreme Court. I go and I will be like, I need not pay this. But does that relieve me from not recording that as a liability in my books? According to me, no. But that's why they're disputed. But again, that doesn't come under disputed also. Because disputed means you should be going to appeals, commissioner appeals or high court, tribunal, you should be going there. It cannot be treated as disputed also. It's your statutory. Okay. Can we proceed? Okay. The ninth point is repayment of dues. Okay. Now, there is a major catch in this point. What they tell in this point is whether the company has defaulted in repayment of loans or borrowings or in the payment of interest thereon to any lender. If yes, the period amount of default to be recorded in the given format. Sir, what are they asking us to do in ninth point, sir? They are asking us to tell if there is any money that is payable by the company. If so, is there any default in that? If there is a default, then for how many days it is there is a default, that details you have to disclose. That is what they are trying to tell us. Correct? Now, the point what they are telling is, sir, what is default? I was supposed to pay on 31st March. Is that a default? I have still not paid. Is that a default? That is just the outstanding figure. Sir, what is default? Default means what, sir? I was supposed to pay, but I am not paid. I mean, as per my schedule, I was supposed to pay on a particular date. As on January, I should have already paid, but I am not paid even in March. Now this becomes a default. Default means, sir, I'm not paid, accrued and not paid. Sir, this is default, sir. Default is I was liable to pay. Now the bank may take actions on me. I mean, I was liable to pay, but I'm not paid. This they'll call it as a default. Sir, one more thing what they tell us. They tell whether the company has declared as a willful defaulter by the bank. Sir, what is willful defaulter? Once in Vijay Mallya's case, he was declared as a willful defaulter. What is willful defaulter, sir? Sir, I have money, sir. I'm going in a Rolls Royce, but I will not pay your money. Bank comes and asks me, I'll be like, no, I will not pay you. That means what? You don't have money and thala, sir. I have money. I'm going in a Rolls Royce. I'm partying, but I will not pay your money. Sir, this is known as willful defaulter. Willful means willfully you are trying to cheat us. Is the company declared as a willful defaulter? The third thing what they tell us, this is a major point, sir. They tell whether term loans were applied for the purpose of which the loans were obtained, if not the amounts were diverted. Sir, I'll just take this point. Why is this important? Suppose I'll approach a bank. I'll tell them, sir, I need a term loan of 50 lakhs. Sir, bank sumne kottudtara, sir. Chalo, 50 lakhs take. Sir, first thing they'll ask you is why? Why do you need it? Correct? I'll tell, sir, I need to buy a machinery. Now they'll give me a term loan for procurement of the machinery. Sir, here what they're asking the auditors to do is, they want us to comment whether that 50 lakhs, whatever you have taken, whether it is utilized for the purpose for which it was obtained. I mean, I took that 50 lakh rupees of loan for the purpose of buying a machinery. Was that utilized for the purpose of machinery only, or did you divert that money? Sir, they want to investigate that. I mean, they want to comment upon that. Sir, let us do it, sir. Because if I look at the terms of the loan, I will get to know that 50 lakh rupees is taken for buying a machinery. Whether they have bought machinery with this amount or not, that I can comment. But here, two things confuses us. First confusion. Sir, I take loan on my FD. Sir, the company has some 50 crore rupees of FD. On that, against FD, I can take a loan. Correct, sir? I can, now online only you can do it. Against FD, I can take a loan. Sir, suppose I took a loan keeping my FD as a security. I mean, 90% of the FD, whatever it is, they gave it to me as a loan. Sir, does that have a purpose or it do not have a purpose? I mean, do you have any agreement to establish the purpose or you don't have anything? Company may tell, sir, I wanted to take a machinery. So whatever FDs I had, against that FD, I took 90% as a loan. 45 crores I took as a loan. But is there anything to establish that? Is there any agreement with the bank? We get nothing. We get nothing. On a safer side, if these kind of things has happened, sir, on a safer side, comment that yes, company has taken a loan against FD for procurement of machinery or something as explained by the company, but the purpose of which is unknown. I mean, we are not in a position to exactly comment for which the particular loan was taken, because there is nothing, no documents or nothing to establish the purpose of the loan, so we are not commenting upon that. So that has to be specifically written. This is one catch. The second point, what happens is, sir, in one of the clients this had happened. Sir, they took one very interesting situation we were in. They took a loan of 50 lakh rupees for procurement of machinery. They wanted to import a machinery for which they took a loan of 50 lakhs. Sir, there was some issue with the vendor. So the import happened after 3 months. The machinery came after 3 months. Sir, these 3 months company people were very intelligent. They were like, why waste money? I have 50 lakh rupees. Why waste this money? Let me invest in shares. Let it grow. Take back that profits. This 50 lakhs, give it to machinery, procure. Said they did it for 3 months and earned some profit. Sir, they did not divert it, sir. They paid that 50 lakhs for machinery and they bought. We were confused. Should I comment? Not comment. Should I tell yes, there was a diversion of funds? They took a loan for machinery, invested in shares. Should I tell there was a diversion of funds? Or should I tell no? Company are honest people. With that 50 lakhs, they procured a machinery. How would I deal with it? There is a clarity given to this also. They told, in this case, don't take a risk. You give a note. You tell that yes, money was procured for the purpose of buying a machinery, which initially was invested in shares for 3 months, but however, they have utilized for the purpose for which it has obtained at the end of the year, so there are no irregularities also. Sir, this note has to be made. You cannot keep quiet, it was regularized at the end. Don't do that. This note has to be.
If the shares value had come down, then it would have been a.
Correct, then it would have been a real lesson to them. Adani, if at all they invested, then it would have been a great lesson.
Anyways.
Next is, again this is an important clause, which created confusions in us. They tell, application money raised by public issue and preferential allotment. Correct? They tell application money taken from by way of a public issue. Sir, we know that, suppose you people are public, I am the company, I raise money from you. Sir, I have to deposit in a separate bank account. I cannot mix it with my current account and all. I have to deposit in my separate bank account. And I have to utilize for the purpose for which it was raised. Correct, sir? Now the question is, Caro is asking us to comment upon whether the money raised from the public is used for the purpose for which it was mentioned. Question to you people is there any such clause in your Companies Act? Will your Companies Act or Schedule 3 require the company to comment on the utilization of the money raised to public? Sir, one thing, there is nothing in Companies Act as such to comment upon this in the financial statements or something. We comment in the board's report. Sir, generally they comment in the board's report. In board's report we tell, the money raised to public was utilized for so and so purpose. Sir, I tell you, in Schedule 3, if you make a careful analysis of this and your Schedule 3, they'll ask the company to comment on the unutilized money. Sir, I'm agreeing, sir. Sir, I raised some 1 crore rupees from public. 90 lakh rupees I used. Another 10 lakh rupees I have still not used. Sir, your Schedule 3 asks me to comment upon that 10 lakhs. Schedule 3 will not ask me to comment upon the 90 lakhs. But your Caro is asking me to comment upon the entire 1 crore. What happened to the entire 1 crore? Was that utilized for the purpose for which it was raised? So here is where there is a contradiction between your Caro and your Companies Act. So general approach what we are taking is, we are asking companies to report that in the notes, not in Schedule 3 this thing, sir. We are asking them to comment upon this in the notes. Based on that note reference, we are commenting to. So that is the safest approach what we could take, because what do we know? We don't have any basis to comment upon that, because Schedule 3 or Companies Act is not supporting this particular clause. So this is the approach what we are trying to take. Right, sir? Here also the same point comes, sir. Suppose if money raised to public, temporarily invested in shares, then utilized for the purpose for which it was raised, this, if at all it has done that, this also has to be commented upon as the clause. This was raised for some purpose, but temporarily it was to be invested somewhere, and now it has been regularized. Preferential allotment, you have to give due this thing to section 42 and 62. Yesterday's session there was a detailed discussion on what are the requirements of section 42 and what are the requirements under section 62 whenever there is a preferential allotment or a private placement. So all those requirements have to be checked. If there is any deviation, that has to be commented upon in this clause. Let me wrap up a little fast. Okay. Next thing is your 11th point is on fraud. You have to comment upon fraud. Sir, one thing, you need not comment upon all fraud, sir. They use the word as, if at all you read here, they tell whether any fraud by the company or fraud on the company has been noticed or reported during the year. So you have to comment upon if there is any fraud noticed by the company and reported by the company. So you need not go and check if there is any fraud. You have to do it as per your SA 240. Your standards on auditing 240 tells you how do you deal with fraud, how do you find out if there is a fraud, and you have a requirement that if the fraud amount is more, as per Companies Act, if the fraud amount is more than 1 crore, you have to go complain to the CG. So you have to do all those things. But here under Caro they are telling you have to report upon 2 things. One thing, if at all you have complaint under Companies Act, if the amount is more than 1 crore and all, that you have to comment. And if there is any fraud which is noticed and reported during the year, on that we have to comment. If you feel there is something fraud, sir, mostly there is a fraud, sir. Sir, you need not comment upon that. Company, if at all it has identified and recorded, that you have to comment. Clear? Next point is, generally we don't come across this unless and until you are handling some Nidhi companies. So this particular clause is applicable only to Nidhi companies. So Nidhi companies, you have to give a ratio. Your net owned funds to the deposits, that should be 1:20. One important point to note here is, what is your net owned funds? Net owned funds, they tell it as your paid up share capital. Here they tell only equity share capital, sir. Net owned funds, Preference share capital they don't use, they use equity share capital. They tell free reserves, again here no other types of reserve, they tell equity share capital, free reserves reduced by your accumulated losses. So what comes, this will treat it as your net owned funds. To that, if you compare your deposits, is to be in the ratio of 1:20. So this particular clause, let me not very much stress upon, because this is applicable only to your Nidhi companies. Generally, we don't comment upon this clause. Right. Next thing is transactions with related party. I think one major thing here is they are not covered. I mean, transactions with related party, your section 185 or 186, whatever we just 188 for example, that whatever was covered. So that requirements, whatever Ravi sir just detailed you for in the previous session, that is your transactions with related party. You have to comment upon, they are telling whether all the transactions with related parties are in compliance with section 177 and 178 of the 188 of the Companies Act. I mean 177 and 188, whatever we just spoke, that audit committee, or 188 related party transactions, whether those provisions have been complied or not complied. If at all they have not complied, whether proper disclosure have been given, or if not, you have to comment upon that particular clause in this here. Okay. This is a new thing what we have included in your CARO 2020 internal audit. Sir, you have to comment whether the company, apart from statutory audit, is there any internal audit in place, and whether that internal audit is effective, and have you taken any support from that internal audit. Now the question is, can we take support of the internal auditors? Yes sir, your standards on auditing allows you to do that. To an extent, you can rely upon the work of the internal auditors. If you have relied upon his work, then you have to disclose here that you have relied upon his work, and to what extent you have relied, that you have to disclose it here. That is your internal audit. Now one major part what comes here is non-cash transactions with director. Now the question is, what is non-cash transaction? Sir, it covers both. Generally, sir, what is non-cash? Suppose barter, just to assume non-cash means there is no cash involved. Company gave an asset to director. Director did not give a cash. He gave something else, non-cash. Or it can be vice versa also. That covers both. I mean, director gave an asset to company, and company did not give cash. Instead of cash, it gave something else. So both the things, whether from company to directors or from directors to company, both the things are covered under non-cash transactions. So first of all, there is a restriction in under section 192 of the Companies Act that they should not be doing a non-cash transaction. Sir, no sir, it's a genuine transaction you have to do. If at all you have to do, there is a requirement given. Sir, they tell you have to take a resolution of the shareholders, prior resolution. I mean, before you do any non-cash transactions with the director, prior approval of the shareholders have to be taken. Only after that you should be entering into a non-cash transaction. Point number one to remember. Second thing, sir, not only with my director, sir. I mean, I am a company. Company should not only not do non-cash transaction with the company's director. It should not be doing non-cash transaction with the holding company directors, subsidiary company directors, associate company directors. Sir, with none of these directors we should be doing a non-cash transaction. Sir, suppose if at all you have to do, as I told you, that prior approval of the shareholders have to be taken, that compliance whatever is given under section 192, that has to be complied. Sir, one very important point to note here is, suppose you are doing a non-cash transaction with a director of a holding company. Sir, not only resolution of your company is required, resolution of the shareholders of holding company is also required, because that director is doing a non-cash transaction with their subsidiary company. They should pass a resolution. That resolution also you have to obtain. Only after that you have to comment it is correct. If at all it is not there, then it's a violation of section 190. Clear?
Suppose the company is using the director's premises for carrying out the business and they are not paying any rent. Would that also come under?
No, there is no transaction, right? I mean, it's just a free thing they have given it. Non-cash transaction as in, suppose I take some building of the director.
Okay.
Instead of giving cash, I gave him something else. I mean, I gave him a car, I gave him something else. So these kind of, without involvement of the cash, transactions has happened. So this is known as a non-cash transaction. So if this has happened, prior approval is required. One more very important point is, as an auditor, we have to look for resolution, prior approval by of the shareholders to a resolution of my company, resolution of the holding company. Third point to note here is, there has to be a valuation from the registered valuer. Sir, at whatever price I need, I cannot transact. It's a non-cash. Cash will have a value. I take a building, give him something else. It has to have some value, right? I cannot value it at whatever cost I need. Here, they have made it mandatory that from a registered valuer, you have to have a valuation.
Suppose if the bank account is not open and the promoters direct spend from their pocket, it's some point we have to bring that into the bank entry into the books of accounts. That is a non-cash and cash.
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 Suppose you are the director of company, you have got a vehicle. Business purpose by another director.
One second, sir. I'm just using it.
You have got a vehicle which is used for another director of the same company.
I mean, the vehicle is in whose name, sir?
Your name.
My as a company.
You are, no.
Director.
You are a director.
Okay.
There's another director. He has traveled. He is using your vehicle for company's purpose.
Oh, okay.
That's also non-cash, no?
No.
Right?
No, sir.
That is not company.
Now, first of all, the car is in own name, which he may use it for business purpose. That is not a non-cash transaction. I mean, if it's the vice versa, company's car, if at all he is using for personal use, then that purpose, those things get attracted. If he uses his own car for company purpose and company is not paying anything, then there is no question of non-cash transaction. We are not doing any non-cash transaction. Sir, the main objective to understand here is non-cash transaction means I am not paying any cash. That is not non-cash. Sir? Yeah.
That is not cash.
Non-cash. Correct. So this is, as sir took an example, I took a building. Non-cash. Sir, because
equity will come into this.
whenever you do it, ROC filings also, sir. Why I tell you it's a non-cash? One thing is Caro has clarified it. Second thing, sir, whenever I allot a share, I have to do ROC filings. Then it asks whether the shares were issued for cash or non-cash. Sir, I'll tell you one more point. If at all there was a loan of the director, I could not repay that loan. I allotted some share, non-cash. Loan was taken in cash, but I kept it for 2 years. I did not repay that loan. Since the company did not have money to repay, I issued some shares to director. This is generally we do this transaction. Now this is a non-cash. I have to report this as a non-cash transaction. This is what they clarify.
Is there any list of non-cash?
No, sir. There is no list given as non-cash transaction. It goes by the general rule. I mean, they don't specify this is cash, this is non-cash. I mean, certain places like this, they are given a clarity. But generally, there is no such list as such. Okay. The next point is, as in main important points, this is the last, then we'll just wrap up. Registration with RBI. Sir, one very important case I tell you, what we came across in one of my clients. Registration under RBI, they tell whether your company is required to be registered under section 45IA of your RBI Act. Whether it is required to be registered. So now if you go and check this section, what they tell, when should I register as an NBFC or registered under RBI is, if at all your total assets, I have my total assets, sir. If more than 50% of the assets are financial assets, mutual fund shares, suppose if that's the case, first criteria. Second criteria is, I have my total income of so much. More than 50% of my income is coming from financial assets. I mean, my income, financial income I have. So if that is the case, then you have to register under RBI. Then you are not your principal business. They consider it as your principal business is investment activity or this financing activity. Later. Two criteria, asset criteria, income criteria. More than 50% of the assets, financial assets. Second point is both the criteria have to be fulfilled. More than 50% of your income is from financing activity. Sir, I'll tell you one solid example. One of my clients, they are a software company, pure software company. They started their business in 2013. Recently in 2020, after 7 years, they sold that company, slump sale. They sold that company for 230 crores. Not the entire company. They one vertical of business they just retained. Remaining verticals and all, including assets, liabilities, everything they sold. But this vertical they retained. So the company was in existence. Only the undertakings were sold. Slump sale. Now what they did, they got that 230 crores. Before they gave it to investments and all, they were like, chalo, let us keep it in mutual funds. They deposited in mutual funds. So from 2013, company was of the assumption that we are a software company. Auditor is also of the assumption that this is a software company. So now if you look at it, slump sale they have done no revenue, Except for that one vertical what they have kept, no other revenue. Sir, if I look at that revenue, their income from that mutual funds or that whatever there were dividends or that interest on bonds and all, so that is a major part, 90%. 10% is that one vertical, software vertical what they are getting. And their assets also, sir. All the assets they have sold in slum sale. Major assets what is looking in the balance sheet is all mutual funds and shares. So we immediately told, no, you are not a software company. You have to be registered under RBI. This is a place we generally miss out. We have a notion, he is a software company, he is a manufacturing company. We have this notion. But this has to be checked before we comment whether he has to obtain a registration under RBI. Here. The next point is cash losses. Sir, if at all there is any non-cash, due to depreciation I have a loss, amortization I have a loss, not like that. Actual cash loss, if at all company has during this year or the previous years, that has to be commented. And the next thing they tell us, considerations of issue raised by the outgoing partner. Sir, you have to check if there is any resignation by the auditor. If there is a resignation by the auditor, outgoing auditor, does he have any concerns or observations? That has to be commented upon here. The next thing they come is existence of material uncertainties as to company ability to meet its liabilities. Sir, auditor has to check whether all the liabilities are next payable within the next 1 year. That company has sufficient reserves or the capacity to pay that. If the auditor feels no, does not have a capacity to pay it, then they have to comment upon it. Right? General, your SA 570, whatever going concern check, whatever you do, when you do that, you will come to know whether the company has that ability to repay or not. Based on that, you should be commenting upon here. Next thing is transfer of unspent CSR amount. Sir, again, now we know that rules that if at all I was supposed to spend so much on CSR, I spent only 90% of it, 10% I could not spend. What I have to do, I cannot keep it in my current account, I have to immediately transfer it to unpaid CSR account, a separate account I have to open and I have to transfer. So here if there is any irregularities, you have to comment upon in this clause. Now, I told you 20 plus 1, correct? Total points under which you comment is 20 plus 1. Here ends your 20, CSR is your last point. What is that plus 1 is? Sir, suppose I am a holding company auditor. Subsidiary company auditor, someone else is there. I am not auditing subsidiary company. Since holding company subsidiary company relationship is there, now I have to prepare a consolidated financial statement. Sir, while doing this, in subsidiary company's CARO, if that other auditor, he has commented upon few things, you have to disclose it in your CARO, sir. You have to tell, yeah, in subsidiary company's auditor has commented upon para, you have to refer to paras, in so and so para he has commented, and hence you have to bring that into the notice in your CARO. This is your that 21st point. Right, sir? So here at they're just giving a one-line statement telling that before you comment upon anything, you should have a solid this thing. What is that irregularity or what is the amount of irregularity? You should have the entire clarity. If you don't have, you just give a disclosure. Example, we took that FD, loan against FD. We don't know for what purpose it is used. Then you disclose, but don't comment adversely or accurately. The last point what we are telling is just a checklist. So you just prepare a checklist because majority of the times instead of we going our staff or articles would go for auditing. So we prefer you make a checklist and give it to the company first in order to fill. Whatever you could not write it in the checklist, you do substantive procedures to check whether all those things are covered. Right, sir? So with this, then you can have evidence for everything, then you start commenting upon each of the things. So that is not a CARO, that's a general approach by way of a checklist, what we can take. So with this, I just conclude my session on CARO. Thank you, it was a great time with you all. Thank you all.
Well thought of the flow of topics which were very well dwelt upon by the experts in the subject over 2 days. Whatever role the chartered accountants play in the organization, CAs should be a role model, isn't it? Not because some regulator or government is looking upon us or supervising us, but as the routine, habit, day-to-day matter, complying all the applicable laws should be by default. With that note, we have come to an end of 4th session for the day and last session for 2 days conference on recent updates on Companies Act. Recent updates on CARO was very well built upon by CA Srihari R. A round of applause for that. As a token of gratitude and respect, we would like to thank the speaker by handing over a memento. Can I request CA Srikant Prasad sir to do that honor? Thank you, sir. On behalf of MC members of Bangalore branch, we thank all the members here who have supported us, and both the event sponsors and especially all the speakers for their time and effort. Once again, thank each one of you. I, CA Manjunath Mallu, Secretary for the branch, sign off for the day. Thank you.